What's up, guys? Another weekly analysis brought to you by Tyler, part of the Team Let's Eat group, owner of the Wolves of Wall Street FX group. We got the week December 12th through 18th coming ahead, and we are about to dive into these markets. I got three pairs on the radar as we are approaching Christmas and the end of 2021. My trading and a lot of other people's trading kind of slows down, and we're using less and less pairs, or I should say I'm using less and less pairs. Next week, I'm probably going to be only looking at one pair, and that will be gold. So this is kind of like the last week for the trading with the forex currency pairs crosses. And then we can, relax, spend some time with family, enjoy the holiday. Then, as soon as we get into the new year, we're back at it full steam, ready to go. So let's get into gold. Let me delete these lines and everything. We'll mark them back up. I kind of have the hiccups right now, so excuse me on that if you notice that. So with gold, let me delete everything. Actually, blank chart, naked chart is perfect. So what I'm seeing here is, or what I'm expecting is, if you take a look at this structure right here, I'm looking for something similar to happen. Obviously, it's going to be a little bit different, but the overall flow of what is going on here is what I'm going to be looking for this coming next few weeks. We'll see that more and more on the daily and 4-hour and everything. But if you look at this flow, what happened is we dumped down here and we stalled for a little bit, and then we tapped into these lows and we pulled up to a pretty much about 50%, probably a little bit more than 50% of this huge bearish candle. And then we stalled again. We got some spikes to the upside, and then we tanked down to 1680. If you all remember that on the open on August 9, gold dropped like 1,000 pips in the first hour, which is nuts, but I'm not expecting that to happen. But what I am expecting to happen is we have these lows right here. So 1960 and 1722 that I believe will be tapped again going into the new year. Or I should say 1720, I think will be tapped in the new year. And what also interests me is these highs of this previous daily candle and the structure level over here we got. So around 1734. So let's dive into the daily time frame. So what I'm expecting, actually, we're going to come back here first. So looking at this area here, we can see on the daily time frame, of course, price dumped down, and then we popped up and we kind of stalled, right? And there could have been some short opportunities in this area without a doubt, because what happened is we dumped down here about 400 pips. But what I'm eyeing is that we dumped down here and we tapped below this low here, stopping a lot of people out and tricking a lot of people into believing that this is going to continue shorting down. But what happened is we moved back up into these structural levels, these areas that needed to be retested from this huge impulse move down. We pulled into those areas, which is, almost 1,000 pips. We had a nice decline here, and then we shot back up because it wasn't ready. And what's really interesting is you see how the price really flows. So it dumped down here, it stalled for 2 days, right? Everyone's obviously thinking sell. And then on this one day specifically, it shot all the way back up here, possibly stopped some people out, grabbed a lot of orders, and then just completely fell over. And that was that August 9 day where, price opened and just, look, price opened right here. And in the first hour, it dropped 860 pips. Mind blowing. But this flow right here, let me highlight it. Actually, let me show you something too. Look at the date on the bottom, June 25. So June 28, right? So this is a Friday close, right? Then we have Sunday, or I should say the Monday daily candle. Tuesday, tapped in. Wednesday, we hit the low. The rest of the week remained up, and the next week we pushed up. So this style of movement is what I'm looking to see happen here. So we do have this very clear level. If I put my horizontal line right there, you can see very clean level that's being rejected, lots of wicks. So let me go to the 4-hour. So we have this high right here, obviously that is acting as a resistance. Honestly, I could put it something like that just to make it a little bit more, but we're gonna leave it. So let me get my highlighter out. We have these lows, wrong tool. We have this low and a high, a low and a high. I could mark these, but those are minor, right? We have these low, and now we have this high right here that's equal to this high, right? And now we have this high low right here. So what I'm expecting, what makes sense to me, is price is going to dump down just below this low here. And I have this level marked at 1760. You see how we almost came to it, but we didn't quite get to it, right? So what I'm expecting is price to move over into these lows, the 1760, which we could possibly look for a sell opportunity. I'm looking at the 1 hour. If I mark, nope, I keep clicking the wrong tool. If I mark this area right here, you can tell every time price gets into this area and even right here, we get a lot of rejection. So I would not be surprised at the open. If we slowly move up here, I would be looking to take a sell entry in this area down to 1760. Now, once we get into 1760, what I'm looking for is a quick snap down in here and then explosive move to the upside, because a lot of buy orders down in this area are going to have their stop loss just under this low. And what we're going to do is when we get down into this area, hit the buy button, because I don't think that we will spend a lot of time in this area once we are down here. So what I have marked up is pretty much this wick. You can see all the way down to the bottom of the wick. So let me make it a tiny bit bigger, right? So I'm just highlighting this so you can see why I'm marking it. Now I'm going to pull it over just to make it a little bit more clean, right? And then we have the opening 4-hour candle. So what I'm expecting for this week is a move up into these highs. That way we can push down to the low of 1760 and possibly short from these highs to the low for a solid 300 pips. Once we get down here, I don't think we're going to spend a lot of time here. I think it will just be like 1 or 2 4-hour candles, and then we just explode to the upside. Now, one of the first levels that I see is the 1815 area, 1810. Oh, let me clean this up a little bit. Right, so as far as looking at the buys go, once we hit this level of around 1814, I'm definitely going to be looking to close some of the partials. I mean, that's 539 pips. That's plenty of pips to take off the table. But I do think possibly we will creep into these highs the following week, and with it being Christmas, maybe stall for a week, and then as soon as that new year rolls over and we open that week, I think from this general area here, we are going to get a full dump down into this 1723 area, because this area is just begging to be hit again. There's lots of liquidity right down there. So I am definitely expecting price to hit this level in the next few weeks. Let me pull this over. So with that being said, let me just draw this out. Actually, let me delete this. I think we're going to come all the way up here and retest these levels, or at least get really, really close to it. So dump down. And then I think we're going to spring up. This might take 2 weeks. The spring up might take 2 weeks. Stall for a week. And then another 2-week cycle to the downside. Very, very similar to what's going on here. Obviously, the size and the length and the pips are going to be different. Of course, it can never be exactly the same. That's almost impossible. However, I do think the overall flow of what we're seeing here, right? We got the push down, we got the spring up, we got the stall, and then we got the actual move to the downside. I think the stall here is going to be caused due to Christmas, the holidays. You know, it's just everything's kind of slow and weird and choppy, and you know that's why we don't really trade that heavy when it's, you know, in the next few weeks the trading will slow down. But for gold, that's what I'm looking at. So I'm going to zoom out and show you guys. I think I was using the 30-minute actually. So this is what I see when I zoom out. We got to move up, down, up, down, up, down. Came back, test the high. Now we're going to come back down here, slightly lower than down here, and then explode. Sounds good, Quincy. No worries. So pulling this up, looking at this structure, we see what happens is price squeezes, pops out, and it rejects this level. Then it comes down just past this low, just past it, makes a nice wick just past this low, and then we see the explosive move to the upside. Yeah, this is a common pattern that happens a lot, and I believe that is what we are about to see happen this week here with gold. I really, really want to see this level, this low right here of 1762. It tapped out. I think we're going to hit 1759-ish, maybe just under, and then we're just going to explode from there and never pull back, or pull back to that level, I should say. Obviously, we're going to have pullbacks, but I am expecting when price gets here to pretty much just explode right out of it and then slowly creep up the rest of the week. Maybe next week is a little bit choppy and we stay up around here and creep up a little bit more. And then we go sideways for Christmas and then we fall over, right? That would be ideal. We'll obviously trade with what we get, but that is going to be the outlook on gold for the next couple of weeks. So just to recap, we're going to look to sell from the top at the beginning of the week down to these lows, get in down here and hold and swing that buy possibly for the next 2 weeks up into these highs, you know, rough 800 pips, 900 pips. And then we're going to hang out for Christmas, relax, not really pay attention. And then as soon as Christmas is over, we'll come in swinging, we'll come in heavy, and we'll short gold as long as the opportunity presents. Obviously, I do have to add for a quick note, it is possible that from here, gold just breaks this level and drains all the way down here. Then obviously the outlook will change for the next few weeks, but I'm definitely seeing the outcome of gold tapping into this level right here and then moving back up into these highs. That's it for gold. So now let me go like this. And we'll dive into the pound New Zealand dollar, the second pair that I'm looking to trade this week out of 3. So all in all, I'm looking to short based off this weekly time frame. What we see, we had push down, slight pullback, push down again. We've pulled back all the way into these highs, and then we got some not as good news for the pound, giving it a little bit of a weakness from the fundamental side. And looking at the technicals, you can see what happened here is a huge push to the upside. The next week stalled a little bit. It tried to come down, but it ended up closing up here. And then last week, we came up here, made a nice wick to the upside, and we dumped. And then we slowly crept back up the last 2 days of the week, which is perfect, right? Because we closed under the open of the previous week, and the low is lower than that. And we grabbed the liquidity that was higher than that. So everything's lining up nice for a sell, in my opinion. So this is the open of last week right here. What I am possibly expecting, real quick, also, if I pull this to the left, you can see it lines up with a nice structural level of these closes and highs. But we're going to keep it clean and just put it where it was made right there. So I'm actually just going to go to the 4-hour. What I'm expecting for this coming week is a pullback deeper to that 1.96 area, which is around the open of last week. I want to see this week's wick come up here, and then from here, a tip over, maybe spend a little bit of time there, and then we're just going to fall over into possibly these lows, but the first target is going to be the area of this larger wick. So around the low to mid 1.92 area is going to be the target. Pretty much what I drew a zone here earlier. Here, let me get that back. If you guys notice, I deleted that when I went to the weekly. That's why I had that there, is what I was trying to say. Lots of orders down here. So I think on the flip side, if this were to continue bullish, I think at first we would come down here and grab all this liquidity down here. There's lots of orders in this area. But for now, I think we could sell it. And if you like your patterns, you know, we have a possible head and shoulder. That's what that would look like. Here is the neckline. Right, so a slanted head and shoulders, we've seen it a lot. That's one of the other reasons why I'm looking to short this. And if we throw the fib on there, it puts on a nice level of around 1.955. If you wanted to put on the 0.68, that brings us to the level near the weekly open. So whatever levels you like to use with the fib, everything's lining up for this area. So I would love to see price come into that area. This is another level I had marked right here. So pretty much this range right here is where I'm looking to see pound New Zealand dollar tap into. I don't think we're going to spend a ton of time there, maybe like 2 or 3 4-hour candles creating those wicks. It depends at what time of the day price reaches these levels. If we're approaching swap, you know, if it's like 2 or 3 hours before swap, I think we'll stay there, and then stay there for swap, maybe stay there for one more candle after swap, and then start dumping as we get into the late Asian session for whenever price does reach up here. Because if we measure that, it's almost 100 pips into that area. So it's not like a little small 20 pip move. I am expecting, you know, a larger move up here. There was nice buys from down there if you got in that. But that's pretty much it. Looking for a short of pound New Zealand dollar from basically 1.96. I would love to see it just tap 1.96, make a nice wick in the 9.6, maybe stall a tiny bit, and then spill over into the lows where all these orders are. And just to show, it's interesting to see this wick made and see how it exploded. And then look what happened. Price pulled all the way back, just slightly lower than that wick, and then exploded. Same with here. You know, you have this wick right here. you think it's going to short, and then it just starts pumping up, right? So that's a good thing, or a good example of showing like your psychological state with trading, because would say you entered on the close of this 1 hour right here, right? When this this candle with a big wick, when that was forming, this was a huge bullish candle. So if you didn't, like trust or believe or doubted yourself, or, any of those sort of emotions, when this was pushing up, maybe you would have closed the trade manually. And then you look back a couple hours and it's just completely free falling to the downside. So it's good to, when you decide that you're going to enter the trade, make the full decision that you're entering the trade, and don't enter and close it, enter and close it, and doubt and this and that and everything. I mean, there's so many examples. Even right here, you have this wick, right? Enter, stalls. At one point, this was a huge bullish candle, but then it closed down here, and then it dumped. And then look at what this candle, look, we get pin bar, and then this candle was a huge bullish candle. If you were still in this trade right here, you would possibly get tricked or emotionally unstable into thinking, hey, I'm going to close my trade. If you didn't believe in it. And then look what happened. The candle closed all the way down here. Same here, right? We have these lows, we have all these wicks. Price started pushing, and then look what happened. Price turned around, dumped below all of these wicks, right? All these stop losses, and then it just sprung right up. So it happens all the time, which actually, those are really good examples to show you what I mean with this gold buy. I think that's what's going to happen here. I think we're going to sell down into these lows below this low and just snap and just move on up from there. Because if you noticed, these were all wicks. Like, it didn't stay down there. It just tapped down there and went off. So that's what I think what's going to happen here. We're going to tap below it and then go off. But yeah, that's it for the pound New Zealand dollar. I think we're going to come up here to about 1.96 and sell into the 1.92, which is roughly 400 pips. So this should be a really good trade this week. These two pairs, I can tell you right now, gold and pound New Zealand dollar is my main focus. But we will go into pound Aussie just to give you guys some content, and there is a possible opportunity here. So what I'm expecting is price to pull up into this area, whether it stays to that in that area for the remainder of the week, or if it just taps that level and ends the week off down here closer to where we opened. I don't know. It doesn't matter. But either way, I think no matter what happens, price will pull back up into these areas. This is kind of what I'm looking at right here. We got the dump and we got the pullback, and then we got the push. So I think we're going to get something similar to that. Same with down here. Every time price has a huge push down, it typically will pull back. Even like right here, see this huge push down, we pulled back almost, I'm going to say that 75% of this candle, and then we continued back down again, and then we slowly made our way back up. So that's kind of what I am expecting here. On the daily level, you can see, so last week we were looking to short. I was expecting this was the open candle. This was Sunday or Monday's candle. I was expecting price to pull up just a little bit more, to make a little bit larger wick, kind of like how this wick kind of pulled up a little bit more before we actually made the move down. And on this side, see how we pulled down a decent amount before we shot up. So that's what I was expecting last week. We did not get that wick. It just dumped right from the bat, and pretty much all week it just fell right over. But the fact that we stalled once we got down here leads me to believe we stalled here for a reason, and that is because this coming week, I think what's going to happen is we will make a wick that is just slightly below this low, right? This is a lot of pressure. There's no doubt in my mind that we should be able to hit this low, because what's going to happen is if price wanted to continue down, obviously it would hit that low. But if price wants to go up, it's going to up here, which is what I'm expecting. Price would come down first and grab the liquidity before it moves up. Welcome back. So that being said, you can also see here, there's not that much structure going on here. We just, this is the opening candle last week. So yeah, I was really, really hoping that that wick would come up just anything more than that. It didn't even come up higher than this, which is extremely surprising, which is why I didn't call an entry. But that would have been an incredible sell. That was the target. This was the full target, 350 pips. However, I think we're going to be able to get that sort of opportunity. Looking forward to this upside movement here. So yeah, this pretty much is pretty simple. This area to me is where I'm looking to enter at. Whether we dip below that first, come back up, form a little bit of a structure and get our buys. However, price prints out, we will trade, but I'm definitely just waiting for it to come back down to that 1.84 area before we look to buy. Looking at the 30-minute, we can see it has created a level here that was almost hit the last almost 2 hours. Basically, yeah, 2 hours was completely, honestly, the last, let's see, pretty much the last like 4 or 5 hours was completely sideways. So the fact that that pressure died off and we have these highs right here leads me to believe that we will, without a doubt, come back down to these levels, which is 100 and some pips. So if you're a scalper, you could definitely look to trade this. I don't really scalp, so I don't think I'll be able to do that. You know, if we tap these highs, it's a possibility, because now we're looking at, yeah, 130, 140 pips. I wouldn't be surprised if we tapped right here, like literally just right above this, and then completely fell over into these lows. That's going to be an interesting opportunity here. If it's very clear, I might be able to call that out. And if it happens while I'm awake. But if not, down here, this area is without a doubt where I'm going to be looking to buy as long as we reject from it. But I do want to see this area broken past first. I do want to see price wick slightly below that before I start looking to buy. So yeah, there might be a sell opportunity up in this level. It wouldn't surprise me if we get like a nice 10-minute lower time frame scalp, double top, drop to the downside, wait for the spike, and then we can buy 4-hour swing move to the upside here. So real quick, just to run it through one more time, a little overview. Gold, possible, most likely a sell from 1790s down into 1760. As soon as it taps 1760, closing that sell and entering a buy immediately as the 5-minute starts reversing, which will probably happen just before New York. Pound New Zealand dollar, we're waiting for price to move up and tap 1.96. If we get strong rejection from 1.96, I'm definitely going to be placing a sell entry. Targets is 1.92. Pound Aussie, possible intraday little scalp here from the top to the bottom, 140 pips. And the main trade here on Pound Aussie is going to be a buy from these lows up into these highs of 1.92. pretty much just 1.7. Once you get into 1.7, I'm going to definitely be starting to close that trade out. But that's all I got for the Forex pairs. I think Quincy is going to go over some U30 and all those other commodities and indices. I'm going to hand it over to you, Quincy, and then mute myself.
Sounds like a deal.
All right, you should be host now.
All right. How we doing, everybody? This is Quincy, repping Team Let's Eat FX. Hopefully I can share some of my info about indices today. We might even look at a little bit of ADA and ETH, but right now we're going to look at Dow Jones momentarily. Let's go to full screen. Now, right here, I just had it on a 1 hour briefly just because I was looking at just to see if any alleys were going to be challenged, anything breakout worthy, because as we see, this is looking like something that wants to challenge up near the all-time high again, but we'll see if we get any rejection of this area here. But let's kick it back to a higher time frame. Let's go to the weekly. All right. Now, as we see here, we've been really testing some record-breaking grounds up here. But now I'm just being very patient as the texture reveals itself. And I say texture just because I'm looking at how we form supports near this incredibly record-breaking area. Because as you see, what we experienced with this rally that took place for about half a year or so past COVID, it's very clear to see that we are testing some very strong waters. Now, with the New Year's volatility kicking in, I am looking to see if anything is going to start rejecting around this yellow level here. I've usually marked my levels just in partials, or in some might even look at it as fractals, but in my way, I'm just looking at all of these supply and demand zones, and I just want to trap the price in a bearish alley or a bullish alley, depending on what I see. With these indices, I know that they're attached to people's retirement accounts, so they want to go up, but there's going to be some type of manipulation at play so that folks can do what they need to with their liquidations. Now, in this case right here, what I see right now is a potential support forming at about 35 to 500-ish. But I need to see how this weekly candle closes, and I need to see a few more weekly candles as well. So I'm very curious to see how this is going to play out for December and January with the volatility in mind, because it will dictate a lot of how the initial quarter goes. Okay. Now, the thing is, I'm really hoping that we get a lot more movement after New Year's, because if something happens before, I expect a lot of consolidation. But if we get something happening right after New Year's, once the quarter is getting right to settle, I say that we can have some good market structure that we can take advantage of as we get into this lower time frame, as we see right here. We should be ready for some nice shorts as long as this breakdown settles. But if we get some more bullish behavior, expect more challenges all the way up to maybe even the 36,800 area and even more. But just by looking at the momentum here, we need a lot of this momentum to really just cease, really stall for the next few weeks so that we can plan our shorts accordingly. But if our shorts fail, we should be looking to get our buys all the way up into the 36,800 to possibly even 36 900 range, okay? And I'm saying this because if I go to my 4-hour here, we have a nice buyer's trap setting up nicely here. And I say buyer's trap just because of all of this activity right here at 37.8 to 35.8 to 35.900. Just all of these taps here. I see a lot of this liquidity just being absorbed here. And once we have enough buyers that are exposed up here, we should see some drops down here. We can plan our shorts along this descending trend line here. And once I see a lot of confirmation, I can change this line to more of a solid texture and really confirm a bear market. But for now, we have enough rallies where folks can look at Dow Jones with more of a neutral outlook at the moment. But the bears are still setting up strongly. And right now, I'm still more bearish just looking at how the liquidity has been stalling, just looking back at this daily view. Just because it's become so much more lateral than what the actual rally has been, excuse me, as you compare it to the 6 to 8 month rally that occurred. Now that we're becoming a lot more lateral, we have a lot more of a wiggle room to change the market one way or the other. So because now we are moving a lot more laterally and less of a parabolic nature with all of the volatility at hand, and especially with this COVID variant really affecting these major equities, I expect a lot of neutrality before the bears really take over. We still have this strong bull line right here, this trend right here. We still have it, just in case. But the slower this becomes, the more I am inclined to believe this is going to flip bearish. So that's why it looks a little bit jagged, a little bit rough, because we have a lot of stalled liquidity here. And it's becoming a lot more lateral. And the nature of US30 is very triangular, and it has these ranges that are beautiful, very vast. But because we are more lateral now, we have to keep in mind the bears will be running the show very soon if this keeps up. Now, if we compare it to, say, Nasdaq, let's go to this weekly here. Nasdaq is extremely vertical still, so we are still in bull's lane right now. A lot of the tech reports have been positive. Just looking at their 125% gains on certain earnings reports, there are a lot of happy people in tech world, even throughout all of this calamity. But as we creep back towards 16,000, as we creep back here, it's very clear to see that we have some room for price correction. But with all of the positive fundamentals that have been boosting the tech world, I believe that this range will keep extending at least for a few more months. I do not see a lot of bearish intent in the Nasdaq just yet, just looking at this weekly and even looking at the 4-hour. Oh, didn't mean to do that. Just looking at the 4-hour here, it just seems that there's still a lot of room for supports to be tested. And as it seems right now, a lot of bullish intent. We're going to be climbing for a minute when it comes to the Nasdaq. I mean, I do not see 17,000 or 18,000 being out of the picture by the time we get to next spring, if not earlier. Wouldn't be surprised. But there is still room for this to become lateral, just like we see in the Dow Jones. But for now, Nasdaq, I say, is very bullish at the moment. I wouldn't enter a trade unless I saw something beautiful around New York Open, because a lot of the volume can reveal itself within that 2-hour period before and right when New York opens. But for now, I would say that the bulls do have control here. And I expect more of a challenge here. Let me just mark this here, right here. So if anybody wants to get into some scalps, just looking at the triangular nature of what I see right here. Just looking at the master pattern that's happening on the 1 hour time frame here. I expect this to break out more towards the upside soon. Challenge about 16,700 to 16,900 or so, and then settle back down as we consolidate for the holiday period. So I do expect the bulls to take this up here and bring it back down over the next few weeks as we settle for the holiday period. Folks will be trying to collect their earnings so they can have a nice Christmas if they believe in that sort of deal, or even if they're just relaxing with their families now that the financial quarter is closing. A nice little cash out, breakdown, and then we will go forward into some other moves. Let's just take a look at one of my babies, Cardano here. This is a move that I'm looking for right here, looking at this daily time frame. Just trying to time this up with the New Year's volatility ahead. What I'm hoping, or what I'm calculating, just by looking at how these bullish alleys are playing, I expect one more push down here, and then a rebound. I want to be in at the right time for this rebound. But the deal is I need to see the right support being tested. As we see right here, I've been watching this lane for a bit. And now, after roughly 1 year or so, just tracking it back to here, back in early 2021, February, we're now at this bullish support right here, this trending support. And if we can get some more convincing support around this area right here with some volatility that could be coming ahead, we should be able to snipe some real beautiful ROI here if this is playing out like I see it will. Because the way I'm looking at some of the cryptos now, everything is aligning. We should see some more pushes to the downside before we get a massive bull run again. I wouldn't mind buying some now, but I want to be precise and I want to wait till we get to the right level before I really get heavy on this. But I do like what I'm seeing with a lot of the NFT space when it comes to Ethereum's interchangeability, so to speak, and how it reacts with all the other cryptos that are really heavy in the NFT space. But I really want to make sure I get in at the right time. So I'm being very patient before I load up and really prepare myself for the future. Now, if you guys have any questions, please let us know. We are investigating as much as we can into this space so that we can be as prepared as possible. But yeah, that's just about it right here. Let me kick it back over to Tyler. That's just about all I have right here. Looking at Dow Jones, looking at Nasdaq, I'm looking at ADA right now.
Lovely. Nice work. Nice outlooks. Should be a good week coming up. That's all I had for the charts this week. So everyone else is good here. I will go ahead and end the recording and we can get that posted on YouTube.
Let's get it.
All right, cool.